Peter Bain is President and Chief Executive Officer of Old Mutual Asset Management and joins us on the show from, I believe, Boston, Massachusetts. Good evening to you. Thanks for being with us, Peter. It's for all the talk at the Fed about being very sensitive to the data and data flow dependent. By doing this, pulling the trigger twice in as many meetings, it's like they can't get out of this QE fast enough.
Well, Bernie, actually, I think it's important to remember everyone seems to talk about tapering as if it's an event that's happening in isolation. Tapering and the Fed's decisions about tapering have always been very much a reflection of the Fed's assessment of the core underlying economic strength in the American economy and globally. And so it's not a question of their not being able to get out of it fast enough. It's more a question of their continuing to look hard and in a long-term way on the underlying economic data, employment, housing, job growth, and inflation, and conclude that the underlying growth is sustainable enough and strong enough that it will, in fact, support any potential impact of the tapering of the Fed's liquidity. And I think that's a healthy sign for the market. And I think it's important for the Fed to signal today, which they did, that they're going to continue to focus on long-term fundamentals and not get caught up in a what happened in the market this week report mindset. I think that's very important, and I think the Fed's action today was on target.
Peter, do you think there's anything that's going to preclude them from closing down this program in the next, 6.5 meetings or something along those lines? Because everything's pointing in the right direction, right?
Right. By the time the year of the horse has run its course, I think the plan for the Fed is to have completed its program and as a result not have to provide excess liquidity to the market. Because let's remember, that's what quantitative easing is. It's the providing of excess liquidity. It doesn't mean that nothing's happening. It means that the Fed is no longer providing it, that the underlying market is providing what's necessary for growth. I think it would take a substantial change in the macroeconomic environment for the Fed to depart from its stated intention. And those sorts of fundamental shifts in the macroeconomic environment can occur. From our perspective at Old Mutual, I don't think we see that happening. I think we believe the Fed will continue with the stated intention and that the underlying economic activity globally will be sufficient to allow it to do so. And I think that's ultimately a healthy sign.
Peter, it's not the Fed's mandate. However, were you surprised at all that there was no mention of the volatility that we've seen in emerging markets?
Actually, Oriel, that's a good question. My suspicion is that the Fed is watching what's happening in emerging markets. From our perspective, by the way, we think the emerging market stock market declines and currency declines are an overreaction. Everyone seems to keep tying it to these dreaded implications of the tapering program. Let's remember this happened a couple of times before last year. It happened in April. It happened again in August. You had real upsets. But as long as the underlying economic growth continued and the strength in the American and European and Asian economies proved itself out, the markets recovered from those. Now, the emerging markets have had a very tough last 15 months. And we're going to need to see the Fed tapering program succeed, core underlying growth continue for a few months, I think, for this next sort of paroxysm in the emerging markets to stabilize itself again. But I don't think that I wasn't surprised the Fed didn't explicitly comment on it because, frankly, it's a recent development, and I don't think it represents anything that's a sustained trend yet.
At what point do you think that this is going to influence? Because clearly if the market volatility does continue and we continue to see the outflows coming out from emerging markets, at some point that is going to have some form, anyway, of a flow-on effect on the US economy.
I think that's absolutely right, but I think it will take a few months of that activity for the Fed to begin to incorporate that component of its overall macroeconomic analysis to a substantive level where they're going to begin to comment on it and potentially have it impact their thinking.
Peter, we're going to get into strategy in our next section with you after the break, but I just wanted to ask you about your impression of the State of the Union yesterday. Things like raising the minimum wage. I thought maybe for the financial industry, the MyRA program, the basically more encompassing retirement savings program that President Obama announced he wants to put into place. Could these be interesting factors for the market? Could they generate a little more liquidity, a little more circular activity in the markets?
Bernie, the State of the Union, it was interesting. It went pretty much as expected. He focused on income inequality. He talked about exiting Afghanistan completely. He talked about getting America off of a permanent wartime footing. He covered a lot of topics that people assumed he would. But the MyRA, which he frankly stumbled over a couple of times saying, it has some interesting components to it. From our perspective, we do think it's very important that we find more ways for wage earners to save for retirement and prepare for retirement. We just think that's important to the long-term economic health of a society. So the MyRA proposal has some interest to it. It has some merit to it. What I found interesting on the wage raise issue was the way he went at and over the heads of Congress, which was another running theme in his speech. It was, in an interesting way, it wasn't so much a call to action to Congress. It was more just a call to function to Congress and say, hey, everybody, get on board with these things. But frankly, if you're not prepared to be able to function, I will go over your head. I will go around you. I'll dig tunnels. I'll do whatever I need to do. And he then proceeded on the wage hike to talk to governors of states in this country, to talk to mayors of cities in this country, and to talk to employers and say, look, raise your wages, pay people more. It was an interesting call, and certainly if people act on it and wages do increase, you'll see an increase in consumption. You know, the 800-pound gorilla question following on that one, Bernie, is when people begin to increase consumption and wages go up, at what point do you begin to have an inflation question? But that's a balanced issue, and that's something worth watching. But the MyRA was interesting, and the wage raise call to arms was interesting.
Yeah, and the I've got a phone, I've got a pin talk leading up to the State of the Union was interesting, too. I'll bet 2014 could be a very bumper crop year for the pen industry. All right, Peter, strategy with Peter in the final section with him. Right ahead.
Watching Cash Flow on CNBC, first in business world.